Alright people, let's talk crypto. You've probably heard the buzzwords, Bitcoin, Ethereum, blockchain, but what does it all mean? It's like the Wild West out there with everyone and their grandma trying to make a quick buck. The market is bustling with activity and it can be overwhelming. But don't worry, I'm here to break it down for you. We'll cut through the noise and get to the heart of what you need to know. We're gonna demystify this whole crypto trading thing. It's not as complicated as it seems once you get the hang of it. By the end of this, you'll be throwing around terms like blockchain and market cap like a pro. You'll understand the lingo and the concepts behind it, or at least you'll be able to impress your friends at parties. Imagine dropping some crypto knowledge and seeing their eyes light up. Cryptocurrency trading is basically buying and selling digital currencies. It's a digital marketplace where you can trade assets just like stocks. Think of it like trading stocks, but instead of owning a piece of a company, you own a piece of digital code. This code represents value and can be traded. Sounds complicated? It can be. The charts, the jargon, the volatility, it's a lot to take in. But it can also be incredibly exciting and potentially profitable. The thrill of seeing your investments grow is unmatched. The key is to start with the basics. Understanding the fundamentals will give you a solid foundation to build on. We're going to walk through everything step by step. From setting up your first wallet to making your first trade, we've got you covered. We'll talk about different cryptocurrencies, their unique features and what makes them valuable, how to buy and sell them, and the platforms you can use to trade safely and efficiently, and the strategies you can use to, hopefully, make some money. So, buckle up, Buttercup. We'll explore different trading techniques and risk management tips. It's time to dive into the world of crypto trading. Get ready to embark on this exciting journey with us. First things first, let's meet the players. In the vast and ever-evolving world of cryptocurrency, there are a few names that stand out above the rest. In the world of crypto, you've got your big dogs like Bitcoin and Ethereum. These two are the heavyweights, the ones everyone talks about. Bitcoin was the OG, the first cryptocurrency to hit the scene back in 2009. It was created by an unknown person or group of people using the name Satoshi Nakamoto. It's like the granddaddy of crypto. It laid the foundation for everything that came after. Then you've got Ethereum, the cool kid on the block. Launched in 2015 by a young prodigy named Vitalik Buterin, Ethereum brought something new to the table. Ethereum is more than just a currency. It's a platform for building decentralized applications. This means developers can create their own apps on the Ethereum network. Think of it like the Apple App Store, but for crypto. You can find all sorts of innovative applications from finance to gaming, and then there are literally thousands of other cryptocurrencies out there, each with its own unique features and uses. Some are designed for specific industries while others aim to improve on existing technologies. Some are focused on privacy, others on speed, and some are just trying to be the next big thing. The diversity in the crypto space is truly astounding. It can be overwhelming, but the good news is you don't need to know about all of them. Just start with the basics and build your knowledge from there. Start by learning about Bitcoin and Ethereum, and then you can branch out from there. These two will give you a solid foundation to understand the broader crypto landscape. Remember, knowledge is power, especially in the crypto world. The more you know, the better equipped you'll be to navigate this exciting and sometimes confusing space. Now let's talk about how you actually trade these digital coins. There are two main ways to trade crypto: spot trading and futures trading. Spot trading is like going to the store and buying groceries. You pay the current price, and you get your goods right away. Futures trading, on the other hand, is like pre-ordering your groceries for next week at today's price. You're betting on whether the price will go up or down by the time your order is filled. Futures trading can be riskier, but it can also be more rewarding. It's like the difference between playing it safe and going all in on a poker hand. Which one is right for you? That depends on your risk tolerance and your trading style. We'll get into that more later. Before you can start trading, you need to know where to buy and store your crypto. That's where wallets and exchanges come in. A crypto wallet is like your digital piggy bank. It's where you store your cryptocurrencies. There are different types of wallets, some more secure than others. Hardware wallets, for example, are like Fort Knox for your crypto. Exchanges are like the stock market for crypto. They're online platforms where you can buy and sell cryptocurrencies. Binance, Coinbase, Kraken, these are just a few of the big names in the crypto exchange world. And then there's the blockchain. Think of the blockchain as a giant public ledger that records every single crypto transaction. It's what makes cryptocurrencies secure and transparent. It's a lot to take in, I know, but once you understand the basics of wallets, exchanges, and the blockchain, you'll be well on your way to navigating the crypto jungle. Section 5, Binance and Coinbase, your crypto wingmen. Alright, let's talk about where the magic happens. Crypto exchanges, there are a ton of them out there, but two of the most popular are Binance and Coinbase. Binance is like the Las Vegas of crypto exchanges. It's got everything you could ever want, hundreds of cryptocurrencies, advanced trading features, and even its own blockchain. Coinbase is more like your friendly neighborhood bank. It's user-friendly, regulated, and a great option for beginners. Which one you choose depends on your needs and experience level. Binance is great for experienced traders, while Coinbase is perfect for newbies just dipping their toes into the crypto waters. Section 6, Candlestick charts, your crystal ball, sort of. Now let's talk about how to actually make sense of the crypto market. This is where things can get a little technical, but don't worry, I'll keep it simple. One of the most important tools for crypto traders is the candlestick chart. These charts show you the price movements of a cryptocurrency over time. Each candlestick tells a story, showing you the opening, closing, high and low prices for a specific period. By analyzing candlestick patterns, traders can try to predict future price movements. It's not an exact science, but it's one of the many tools traders use to make informed decisions. There are tons of other indicators and tools out there, but candlestick charts are a good place to start. Section 7, diving in. Choosing an exchange and making moves. Ready to jump into the crypto pool? It's an exciting world with endless possibilities. Here's a quick rundown of how to get started, but remember, preparation is key. Step 1, choose an exchange. This is where you'll be buying and selling your cryptocurrencies. We talked about Binance and Coinbase, but there are plenty of other reputable exchanges out there. Each has its own features and fees. Do your research and find one that suits your needs. Look at user reviews, security features, and the variety of cryptocurrencies offered. Step 2. Create an account. This is usually straightforward but requires some personal information. This usually involves providing some personal information and verifying your identity. This step is crucial for security. Step 3. Fund your account. You can't trade without funds, so this step is essential. You can typically fund your account with a bank transfer or credit card. Some exchanges also accept other cryptocurrencies. Step 4. Choose your crypto. This is where the fun begins. Do your research and decide which cryptocurrency you want to buy. Each has its own strengths and weaknesses. Step 5. Place your order. This is the moment you've been waiting for. You can usually buy crypto at the market price or set a limit order to buy it at a specific price. And that's it, you're in the game, you're officially a crypto trader. Congratulations. Now don't go spending all your money just yet, the journey has just begun. We still need to talk about trading strategies and risk management. Stay tuned for the next steps in your crypto journey. Section 8. Trading styles, from day tripping to hodling tight. Just like there are different types of investors in the stock market, there are different types of crypto traders. Day traders are like the adrenaline junkies of the crypto world. They buy and sell cryptocurrencies within a single day, trying to profit from small price fluctuations. Hodlers are the patient ones. They buy crypto and hold on to it for the long term, believing that the price will eventually go up. HODL is actually a misspelling of hold that became a popular meme in the crypto community. Swing traders fall somewhere in between. They hold on to their crypto for a few days or weeks, trying to profit from medium-term price swings. Which trading style is right for you? That depends on your personality, your risk tolerance, and how much time you're willing to spend monitoring the market. Section 9. Playing safe risk management 101. Crypto trading can be incredibly risky. The market is volatile, and it's easy to get caught up in the hype and make impulsive decisions. That's why it's crucial to have a solid risk management strategy in place. Rule number 1, never invest more than you can afford to lose. Crypto is a high-risk investment, and there's always a chance you could lose everything. Rule number 2, diversify your portfolio. Don't put all your eggs in one basket. Invest in a variety of cryptocurrencies to spread your risk. Rule number 3, have an exit strategy. Know when to cut your losses and walk away. Don't let your emotions get the best of you. Section 10. Beware the traps, scammers, FOMO, and your emotions. The crypto world is full of opportunities, but it's also full of pitfalls and risks. Here are a few critical things to watch out for. Scams. Unfortunately, there are a lot of scammers in the crypto space. Be wary of anyone promising guaranteed returns or asking for your private keys, FOMO, or fear of missing out. It's easy to get caught up in the hype and make impulsive decisions when you see the price of a cryptocurrency skyrocketing. But remember, what goes up must come down eventually. Emotional trading. Don't let your emotions cloud your judgment. Make rational decisions based on your research and your risk tolerance. Section 11, ready to trade, start small, dream big. So, there you have it, a crash course in crypto trading. We've covered a lot of ground, from the basics of cryptocurrency to trading strategies and risk management. The most important thing is to start small and keep learning. Don't be afraid to make mistakes. That's how you learn and grow. The world of crypto is constantly evolving, so stay informed and stay ahead of the curve. Who knows, maybe you'll be the next crypto millionaire.